America's working class has been cheated. That is an assertion.
Open border coordinate. That's a Koch brothers proposal.
And the Democrats jumped right on board with the corporatists. They got in bed with Wall Street, military-industrial complex, the fossil fuels, Silicon Valley. And now look what happened to the country. We have the biggest income disparity since the Gilded Age. Bigger than that. There's more.
Expanded trade has thrown the working class into much more competition than they experienced before trade with lower wage countries took off.
Can say is that as a country, we have to make a different set of choices because the choices we've made have hurt working people.
Congressman, because I wouldn't know what to tell you to write. I don't know what to do about the depression and the inflation and the Russians and the crime in the street. All I know is that first, you've got to get mad. You've got to say, I'm a human being. God damn it. My life has value.
Hello, and welcome to another Institute for Sound Public Policy podcast. I'm your host, Kevin Lynn, and today I'm joined by geopolitical analyst Tom Luongo. Tom, welcome to the show.
Welcome, Kevin. Thank you for the invite.
Well, it's great to have you here. And I thought before we get into our discussion, I would give our viewers who may not be that familiar with you a brief bio sketch. And, we'll kind of start it from there.
All right. Sounds good.
So here we go. Tom is a former research chemist, amateur dairy goat farmer, anarcho-libertarian, and rambunctious follower of Austrian economics. He's been published on all the sites that matter, like Zero Hedge, LouRockwell.com, Bitcoin Magazine, and Newsmax Media. And you have a motto that goes, on the internet, you are what you type. Tom is the owner and publisher of the Gold, Goats, and Guns newsletter, in which he attempts to connect the false narratives of geopolitics to viable long-term investment theses. And I must say, Tom, if your trades have been as spot on as your geopolitical analysis, I would imagine you're sitting pretty comfortably right about now.
Yeah, that's fair. We've been doing Gold, Goats, and Guns now for just over 6 years. We just published issue 73, so one a month. This is year 7. And over that time, the portfolio strategy, and it's a retail investor level style newsletter, not much different than what they publish over like Agora and what I do over at Newsmax as well.
Right, I subscribe to it, and someone who's ignorant of a lot of this, I get a lot out of it.
Right. And so that portfolio strategy and the way I've got the various sub portfolios, designed in terms of, asset allocation, with even after this year's pump and dump in this dump in the commodity markets. Yeah, I think we're sitting at somewhere around 16% annualized return over 6 years.
Wow, that's fantastic. So beating the street.
Yeah, that's what we're trying to do. I mean, the big thing, and believe me, I've made many a bad decision. I've held on to many a position too long. We all make mistakes, but as long as you bat, in this business, if you can bat 650 or so, you'll do well. Right? You got to bat better than 500, and you're never going to bat 1,000. So,
and that's probably one of the things I really appreciate about you, Tom. There doesn't seem an ego involved. If you see where things aren't going as you thought they were, you're very upfront and say, well, I was probably wrong about this. This is what I'm going to do this is the course correction.
Yeah, it has to be that way. When I first got hired at Newsmax in 2013 to write what then was Gold Stock Advisor, and then we rebranded Resolute Wealth, that was the first question that the editor that I wound up working with that taught me how to write a financial newsletter. One of the first questions she asked me in that interview was, so what's more important, being right or owning up to your, if you're wrong, what are you going to do about it? I'm like, are you going to double down or are you going to admit it and move on? I'm like, you admit it and move on. Again, you highlighted it in the bio, right? I'm scientifically trained, right? And as an undergraduate and even as a potential graduate student, which could have been the road not taken for me, as a high energy physicist, you're going to be wrong an awful lot.
Sure.
Okay. And for that reason, failure in science isn't failure. Failure is an opportunity to go, that hypothesis, it's not bad. Let's do Mark II. Oh, Mark II, there you go. And you're constantly doing this,
And in that
business,
way, it becomes
it's
didactic,
continuous
doesn't it?
improvement. It's not a big deal, right? So
Right, exactly. And maybe a good way for us to jump into the podcast, Tom, is a few months ago, I was listening to your take on Jerome Powell's policies at the Fed. And as my audience knows, he's been raising interest rates. And what many people seem to feel is this is in a response to the inflation, whether you believe it's systemic, it's long-term, short-term, and everyone's kind of hinging, well, once we get inflation here, everything will change. But your take on it is very different. And if people aren't aware of your views on this and understanding of Powell's intentions, they're going to get it massively wrong. So if you can kind of jump into that, Tom, and talk about your thoughts on Fed policy at this time.
Sure. So inflation, or fighting inflation, that's the Keynesian mantra of why we do countercyclical monetary and fiscal policy, is why we do these things, right? At this moment in time, fighting inflation is a cover story. I'm just going to like let's rip the Band-Aid off and get to the thing. What is the Fed? At this moment in time, what is the Fed's incentive for going along with the globalist plan for you to own nothing and be happy? Because in that world, then the Fed becomes one of many central banks with no commercial banks. Because the whole point of Klaus Schwab and the World Economic Forum and all of their stuff, the Great Reset and all this stuff, is to just do away with the two-tiered monetary system. Where you have the central bank prints the currency, it gives it to the commercial banks who then lend it out to you, right? And it's a two-cycle system, right? And money flows between the central bank and the commercial banks, and then from the commercial banks to you and I, right? Into the economy. Well, in the Schwabian view of the world, and the Christine Lagarde view of the world, in the globalist, Minority Report with more Germans view of the world, is the way I like to put it. You don't need the commercial banks. You just got the central bank and the taxpayers. Well, sorry, the tax cows. And that's what modern monetary theory says. Hey, we don't even need debt. We don't need rate. We don't need anything except taxes to set monetary and fiscal policy. And then from there, we just, institute a social credit system that's based on shame and your carbon debt to the world. So that's their model of what they're trying to accomplish. Now, let me ask you a question. If you're Jamie Dimon, head of JP Morgan. You're John Solomon, the head of the Vampire Squid, Goldman Sachs. Are you down with this plan? Are you down with this plan?
Every Wall Streeter I know. I mean, they like their stuff. They wouldn't be happy without their stuff, without their Gulf Streams and their place in the Hamptons.
Dude, I'm like as solidly middle class as a guy gets, and I don't want to give up my cheap Nicaraguan cigars, and my bad diet soda. Like, that's what I want, right? Like, and this is stevia based, not aspartame based, because I like my liver too much. The aspartame stuff is terrible, right? But that's, and the only reason I'm drinking that and not a cup of coffee is because I ran out of time before we started recording, and I couldn't make any pot of coffee. At this point in the day, I'd make decaf anyway. So when you think about it from that perspective, the whole Schwabian view of the future does away with the most important and powerful lobby in the world, the U.S. commercial banks.
Right. Because that's the lifeblood of all commercial and all enterprise, private, public. It all flows through the money.
It flows through the basic ability of people to do commercial banking at the local, regional, and national and international level. And that's what builds a vibrant middle class. It's what builds sophisticated supply chains to, support, this conversation.
Right.
Right.
And
This
if people are
conversation doesn't
behaving
happen
prudently
without
throughout all the better.
without an unbelievably sophisticated supply chain and the coordination of the labor of tens of millions of people. You and I aren't having this conversation to even disseminate the information contained within it. Okay. So this whole idea that we can, maintain this, but not have a middle class to support it is just insane. It is truly and utterly insane. So
how did we get here, Tom? I mean, you're right, it is insane. When I heard you will own nothing and be happy, and it was coming from someone who would make a great villain in a James Bond movie, it's like, what the heck are they smoking? So how did all this happen, Tom?
Well, one, they're doctrinaire communists. Mm-hmm. They just don't like to say that, but they are. They're doctrinaire communists. So let's rip the Band-Aid off. I don't like the minced words. I don't want to, no, they're really democratic socialists. No, they're just authoritarians. And the ultimate end of one end of the spectrum for this is communism, because because communism believes in the public formation of capital.
Right.
Not the private formation of capital. Not the private sector. So I don't care what version of this you want, what jargon you want to put on it. My response to that is always, well, commies like to play word games and much with the definitions of words in order to obfuscate the fact that they're really just trying to take all your freedom away from you, point guns at you, and tell you to do what they think is best. It doesn't matter what the frame is. It doesn't matter what the justification is. That's all just intellectual gobbledygook to rob you of your reason, that literally they're trying to turn you into a tax cow and a feudal slave.
And this isn't new. While you were talking, a quote from Alexander Solzhenitsyn came to mind, and I just pulled it up, and I'd love to read it to you, get your thoughts on it. Sure. He goes, "Thieves flourish because they were encouraged. Through its laws, the Stalinist power said to the thieves clearly, 'Do not steal from me. Steal from the private persons. You see, private property is a belch from the past, but personally assigned, very important person property is the hope of the future.'" And then he goes on to say, "Greedy cowards, the thieves, pushed their way in where they were encouraged to push their way in. They stripped the clothes from the solitary passers-by and stole from unguarded apartments."
Yeah, absolutely. Lies are expensive and the truth sells itself, right? There's a Tom Luongo aphorism for you, right? You started today with one of them. Another one is, a corrupt money begets a corrupt society.
Absolutely. That old adage, kind of, as the bad money chases out the good.
Right. It's Gresham's law and all of that, right? So now let's look at the world we have today. Let's look at we can go into the historical. I've got a new frame of a new riff on how we got here, and I'm not sure that we really want to do that here today, because I think our plan was to do just to get down to the nitty gritty of things, of where we are, and then once you understand the thesis, then you'll understand the historical frame, and we'd have to do another talk on this. But here's the thing. How did we get here? We got here because the globalists pushed us to the brink of destroying the middle class. They're clearly destroying the middle class in Europe. They're trying to destroy the middle class here in the United States through taxes, regulations, out of control spending, ruinous monetary policy, taxation that's designed to roll capital away from the middle class and take it from them and roll the wealth up to the overlords. And believe me, the bankers were bribed 100 ways from Sunday to go along with this, except when they finally rolled out the end state, which I believe guys like Diamond and whatnot knew about ages ago.
Okay.
I don't think for a moment that they weren't.
Well,
what I would say is the following. What I would say is the following. They were not in a position to stop it. And because they weren't in a position to stop it, especially after 2008, where they had to be bailed out, and the dollar reserve standard died then, and we moved to the coordinated central bank era starting in 2009, which ended in 2021. That's my frame, not anybody else's. People still think we're on the dollar reserve standard. No, that died in 2009.
Okay.
Okay.
With the bailouts.
With 2008 through 2011, the dollar reserve standard died, and by 2011, we birthed the coordinated central bank policy era, which ended the gold bull market, and forced and then had all the major central banks doing basically round robin QE at the zero bound for about 10 years. Okay?
Interesting.
Now,
so what?
So
2021.
2021, and 2021 is the important date here, because that's the day. Because in the middle of 2021 is when Jerome Powell tightening without officially tightening. Now, understand when you think about why we're here, and why things are different this time, and why Powell's been able to raise the 5.5% and quote unquote not break anything. Yeah, things are breaking, but the world hasn't broken the way everybody thought the world would break.
Can I give you an example of breaking?
Sure.
I know two businesses, and they've been on an acquisition tear for the past 6-7 years, and it's catching up. The cost of capital, they were so used to that near zero interest rate, free money essentially, and that's what was fueling all the acquisitions, and now they've got to refinance. They've got to keep the thing rolling, and they're shitting their pants, frankly.
Yeah. Okay. You're absolutely correct, and it's why the big three automakers are not really angry about the UAW strike, because they can't sell cars anyway. So why make any more?
Interesting.
Okay. Like Stellantis is already staring at like $9 billion worth of CAFE and carbon credit fines over the next 10 years because they're not going to be able to meet the stupid standards that they've created, which basically said we're going to get rid of internal combustion engines and private vehicles. Schwab came out and reiterated that again like Tuesday, and we're like,
it's insane.
Yeah,
just from a logistics standpoint,
it is. It's truly insane. But whatever. He's also the salesman for all this, and but we'll get to that stuff later. Let's just talk about why I don't think the Fed's trying to fight inflation, because that was originally your question here. Right. So as far as I'm concerned, that's a cover story. What the problem for the Fed, even when the dollar became the global reserve currency, was the following. How did it become the global reserve currency? It became the global reserve currency by, after World War II, rebuilding Europe by sending dollars overseas and our manufacturing might overseas to rebuild Europe. And it birthed and the global dollar, which meant that dollars had to be held all over the world. So that creates the offshore dollar markets, or what's known as the euro dollar markets. Now, the problem with the euro dollar markets is that, and they've always been the tail that wags the dog of Fed monetary policy. Not because, and for this reason and this reason alone. How was the debt that was issued, all the loans that were issued to rebuild everything, what was that indexed to? It was indexed to a rate. It was indexed to LIBOR, right? The London Interbank Offer Rate.
Exactly.
Now, LIBOR is a rate set by 18 London banks, 17 of which or 18 banks, 17 of which exist within the City of London. The 18th is JP Morgan's London office. So there's one American bank and 17 British banks. So the British Empire never really ended. They've always had financial control over the United States.
Interesting.
Because they owned the rate at which the cost of dollars was set at the margin. And that cost of dollars at the margin around the world was set by the health of the offshore bank. So every time, and then beyond that,
the shadow banking community is huge, right?
Shadow banking community is huge because now offshore banks could issue loans without ever having to ask for the Fed and be not regulated by the Fed, and they could issue loans and they could become their own, basically become local central banks, sources of dollars. And every time the Fed tried to raise interest rates, to stem inflation here in the United States, what would happen? Well, the offshore dollar markets being far more levered and far bigger in size than the domestic dollar markets set monetary policy. As Jeff Snyder rightly tried to teach everybody last decade about why the Eurodollar system was actually what was set monetary policy. Now, I fundamentally disagree with Jeff's arguments about this, and I think that Jeff is now an apologist for the very people that built this system, but that's between me and Jeff.
Okay.
And you'll know that I don't mince words, and when I see somebody is wrong about something, I'll call them out. When they're right about something, I'll call them out just as equally. Like big fan of people like, say, for example, like Martin Armstrong. When I think Martin's right about things, I'm like, no, Martin, you're absolutely brilliant. And when he's wrong, sorry, Martin, you're also wrong. Like I don't care. I was trained as a scientist. I was trained that disagreement is not an ego thing. It is what's real. This is the data tells us blah. This hypothesis is wrong. Therefore, we have to shift. It's just that simple. It doesn't matter where the hypothesis came from. If it came from your professor or from the undergraduate working part-time in the laboratory, if the undergraduate has the good idea and has the insight, he gets the credit.
Or do they?
Believe me.
What's the old adage?
I was in the room with some of the biggest egos in the world, where I was the fourth smartest guy in the room amongst four people. Okay, and I'm a pretty smart guy, but when I know what it feels like to be the dumbest guy in the room of really smart people, and and then say something and then and then which hits the ego of the important person in the room, and then watch that get shit hammered for it. I've been there, dude. As a 20-year-old, it happened to me, and I'm like, okay, but I turned out to be right. And it's about, I don't want to go into the details of the story because you guys would not understand a word of what I say. It was a 20-minute
carbon filaments.
But it's at the end of the day, it was silly. It wasn't silly to us at the time, but it was one of those moments where I made an argument based on my understanding of chemistry and physics, and everybody looked at me and went, he might be right about this, but what do you know about it? And then 2 days later, they're like, nope, he was right. It was, sometimes out of the mouths of babes, right? So
you made me think of that old adage: science advances one death at a time.
Yeah, no, absolutely. But that's the thing. So again, so Jeff was right in telling everybody and trying to explain to the world that the Eurodollar markets were the thing that set monetary policy, and that the Fed was always at the mercy of it. What Jeff refused to accept was that the switch off of LIBOR to the secured overnight funding rate broke that relationship. And that's why this cycle is different, because this cycle, rate hike cycle, we are now indexed to SOFR, which is a domestically secured, market-driven rate based on real-world repo market transactions, $4 in the United States banking system, and not what's happening to Barclays Hong Kong office that overinvested in Chinese real estate and is now losing its ass, and we have to bail them out. So every time the Fed tried to raise rates, they would stop short of where they needed to go to get back to neutral, right? And then pivot and go lower, because the Eurodollar markets would get into trouble first. The Eurodollar futures curve would invert, the whole thing would explode, and then the Fed would have to be forced to pivot and go back to the zero bound or to the lower bound. And over the course of time, the Fed funds rate traipsed all the way down to zero. I will give Martin Armstrong credit for this one. Ready? We're at a 5,000-year low in interest rates. He's absolutely right about that.
Free money.
Absolutely, right? So what a shock that you should be betting that interest rates are going to go back to the zero bound. Is that air you think you're breathing? Really? No. What has happened now is that when LIBOR banks got into trouble offshore, the Fed would be forced to pivot, because your adjustable rate mortgage is set by LIBOR. Doesn't matter if your credit risk hasn't changed because your business is still good. Doesn't matter that you didn't lose your job and your adjustable rate mortgage is you can. It doesn't matter. You bought it at 4%. The local credit conditions are such that your bank should be able to issue you a loan at 4%. But guess what? Barclays is in trouble. Northern Rock's in trouble. Your adjustable rate mortgage is now 7%, and now you can't afford your loan. The credit impulse here in the United States. Europe gets tuberculosis. We catch a cold. The Fed has to go back to lower rates in order to cure their tuberculosis. Okay.
Now, are we going to provide that cure anymore?
This time?
This time?
No. Because all the debt in the United States is now indexed to SOFR.
Right.
Okay.
So in the end, this is a massive fuck you to the mother weffers.
This is the real U.S. Declaration of Independence away from the colonial powers that have always controlled our actual monetary system. The Declaration of Independence, as written by Thomas Jefferson, is a wonderful piece of rhetoric, and it's one of my favorite documents in the entire English language. It's also just a declaration. The American experiment, the American Revolution, has been going on for 250 years. This is what you have to...
And European banks have been exercising financial hegemony over us, is what you're saying.
That's exactly what I'm saying. And now they can't do so, and they can't do so because they don't have any ability other than begging. They can begmand all they want. The mixture between begging and demanding. Begmand all they want. Got to give credit to my friend Joaquin Flores for that one. You can begmand all you want, baby, but Powell's going to 7%, maybe, or he may go to 6%. He may stop, but he doesn't have to worry about it. Now he doesn't have to because the American banking system can handle higher rates than we've been accustomed to believing that it could handle in the past so we have all this data and we got all this past, which tells us that's prologue for what's happening in the future. And yet it's not working. This is why Peter Schiff and Luke Croman and all these people, some of whom I respect a lot and some of whom I don't, all said the Fed's going to get to 1% and they're going to have to go right back to the zero bound because there's no way they can raise rates. And yet here we are at 5.5%.
Yeah.
And now things are only just now beginning to start breaking.
Right. And that's what I've noticed. Just about now is where I'm hearing the pain.
Mm-hmm. And it makes perfect sense when you start to think about these things. And the Fed's been doing a number of different things. So let's now talk about what the cycle really looks like. Now, why did I identify 2021 as the end of the coordinated central bank era? Well, that was the day that on June 16th, the FOMC meeting of June of 2021, where Powell raised the reverse repo payout rate 5 basis points above the Fed funds rate. And the euro collapsed. In 48 hours, the euro went from $1.22 to $1.19. I had no idea what this meant at the time. I just said, that's odd. But I had said to my patrons that Sunday, hey man, it's at some point Powell's going to have to come in here and step in and defend the dollar. And I only put the two things together because I read, the Zero Hedge article talking about the FOMC meeting, and the only thing they said was, yeah, Powell raised some technical interest rate 5 basis points, and whatever. The rest of the Fed statement was a nothing burger. Unfortunately, that turned out to be the pivotal moment in history. Wow. And I like to call those the 5 basis points that changed the world.
That's amazing. Wow. And where do you see this going? Is it pretty much, it's not a game of chicken. It's really a game of you're going to crack before we do, and then we'll dance on your grave kind of thing? Or
it's more a look, the Fed's a Ponzi scheme. ECB is a Ponzi scheme. BOJ is a Ponzi scheme. All the shadow banking entities are Ponzi schemes. Most of the crypto banks are Ponzi schemes. I say most of them, not all of them. I'm giving a shout out to my friend Caitlin Long over at Custodia Bank, right? When I say that. It's more a game of we're the biggest Ponzi scheme and we're tapering you. We're tapering our Ponzi scheme. And you don't think we can taper a Ponzi? Well, if you're the biggest Ponzi at the table, you can absorb and suck up all the other Ponzi schemes. And if you don't believe me, go look at FTX and what they were. They were a Ponzi Hoover. That's all they did. And they hoovered up all the cash out of all these other stablecoin companies, and then gave them magic beans in return and took all the dollars. Well, guess what? The Fed's given out a whole bunch of debt-based dollars. They're magic beans, but there are magic beans. Now, as opposed to getting them for 0%, you're getting them for 6%. And at the zero bound, and this is something mathematically you got to remember here, at the zero bound, leverage goes infinite. It's like a tangent function. It goes infinite. Okay? Because, you can lever up 40 times at the zero bound because you can always get more free money. But at 6%,
you have to look at cash flow.
Everything changes. Your cash flow curves, you can't go back to the Fed and go get cheap money to shore up the hole in your balance sheet and go venture capital, another bad idea, and meme it into existence in order to hoover up some cash from the Muppets, because that's what they were doing.
Yeah. And we've done it before. We've been at 18%. Businesses have been able to cope with that.
They survived it. Yeah. No, they've survived it. I'm not saying that, again, so what Powell is intent on doing here was, first thing he had to do was just start draining the world of liquidity. When he raised the reverse repo payout rate 5 basis points, what did he do? He drained $2.5 trillion of global liquidity into the RRP facility. Wow. A month after he did that, he opened up a foreign repo facility.
Really? So
what he did was he controlled the flow of the international flow of dollars, which he was sucking out of the world. And then he was turning to the central banks and everybody else going, oh, by the way, if you need treasuries, I got treasuries to loan you because I got $5.5 trillion of them sitting on my balance sheet with nothing to do with them. So, by the way, if you need them, I'll give them to you, but I'm going to start charging you for them.
Wow.
And I said, at that moment in time, I started thinking it through, and I went, okay, so what happened here? My first thought, this is 2021, my first thought was, okay, if he starts raising rates, that facility is going to now start costing them real money to plug the holes in their balance sheets as the bond markets start coming off the zero bound, right? As the long end of the curve, as the short end of the curve starts to rise and the long end of the curve starts to rise, it's still even 50 basis points. Now all of a sudden everybody's like, they're getting the vapors. They don't know what to do. They're screaming pivot. They're like, for the next 6 months, when deflation post-COVID was still a big deal, what had to happen, what the Democrats and what the mother weppers tried to push through was $6.5 trillion worth of spending in the Build Back Better bill and the infrastructure bill and the debt ceiling and all of this stuff. And I said, oh, that's why Pelosi's tying all three bills together. She wants one omnibus vote to get it all, to blackmail everybody into doing this, because if you can get the spending through, it's going to force the Fed to never raise rates because they have to monetize all that debt.
Absolutely. But now, at 6%...
It's called political blackmail. Sorry, go ahead.
The implications and ramifications are apocalyptic in some respects. When you think of the national debt and what the interest payments currently are, what they're going to be at 6%, 7%, it will crush. I mean, it almost has us wishing President Trump was still in office because he has experience with bankruptcies.
Well, the thing is, Kevin, is the following. We can survive the move to 6% and the rolling over of all and the reissuing of all this stuff if we cut the spending.
Okay.
If we cut the fiscal, the point of raising interest rates was to do away with the Fed put, get everybody to understand that the Fed was no longer going to bail out Congress and bail out terrible fiscal policy. Powell's made this abundantly clear at every time he goes out to the podium after another rate hike, and all of the dutiful little millennial girls that they send out there from the Washington Post and the Wall Street Journal, Wall Street Journal, and New York Times, and ask him, well, what are you going to do about fiscal spending from Washington? And Powell's like, that's not my job.
And it's
My
not.
job
That's
is my,
that's
and
the
he
role
stay-
of Congress.
he stays on this dual mandate mantra every time. Every time. So he uses that as the cover story to drain global liquidity of offshore dollars, reversing this massive leveraging through the shadow banking system that created all of this insanity that's literally being used to undermine the United States, to open the border, to tranny bathrooms and this and that, and all these things that we all hate. And we're like, well, where's the money coming for this stuff? Well, it came from a decade worth of zero bound rates and infinite leverage. You want to go back to that because your mortgage is 7%? Well, what do you want? Do you want your child? Do you want to have the ability to say no to your public school? Secretly having chopping off your child's penis, or do you want to pay an extra couple $100 a month on your mortgage payment? Like these are your choices. Like this is the reality, right? And I hate to put it to everybody that way, but that's really the question. And at the same time, you look at these people and you say, dumb ideas never die at the zero bound because they can just be rolled over.
Right.
Infinitely. So that's the situation from that perspective. Now, once Powell was reconfirmed as Fed chair, as FOMC chair, and Biden only did that because the Fed put a gun to their head. And when his term officially ended in February or late January, I think it was in early February of 2022, they voted him chair pro tem, the same way they did the Greenspan a couple of times, and said, look, he's the chair until he's reconfirmed. We're not looking for anybody else. You can't get anybody else through Congress. They wanted Lael Brainerd to bring in communism and MMT and on the whole 9 yards, and it didn't work. Eventually, Biden had to sue for peace, put him up for a vote, and he passed with 80 votes, as our friend Daniel DiMartino Booth reminds everybody whenever somebody asks her about it. Now, that was the middle of February. At the March FOMC meeting, he raises by 25 basis points. And then 50, then 475s in a row, which forces Christine Lagarde to put the TPI program, the Transmission Protection Instrument, which is to protect credit spreads. It's otherwise known as the toilet paper initiative, because that's what she's going to turn the euro into in order to defend credit spreads, which is what she's been doing.
Right, because she has to be in just a couple weeks ago on a Friday when the Fed upped another 25 basis points. Lagarde must have been caught completely off of her.
Oh yeah, the July hike. She was not expecting the July hike at all. And Janet Yellen is her friend over Treasury. You got to understand that this fight I'm talking about, the Fed versus the ECB, the Fed versus the Treasury, it's the same fight. It's the Fed versus Davos.
Right.
It's the Fed versus the offshore old European colonialist powers. Okay? And he has the ability to do that now because we are indexed to SOFR. As of January 2022, SOFR, every debt contract in the United States, your adjustable rate mortgage, your credit revolver, your credit cards, we're all indexed to SOFR. They're not indexed to LIBOR anymore. When he tried to raise rates too far in 2018, he got caught going too far because most of the United States was still on LIBOR. Right. SOFR was being rolled out over a 5-year period, which is why, and he couldn't do anything about, and then he couldn't do anything about the CARES Act because Trump was an idiot, and Powell didn't want the CARES Act to go through.
But that's a spending issue.
It's a spending issue, and at the same time, we did have a seizure in the Treasury market, so he had to do what he didn't want to do. And it really did damage his credibility. Those two events really did damage his credibility, but he always wanted to do this. But he was literally fighting for the Fed's life and for the Treasury market's life and for the commercial banking sector in the United States' life at that point. And the truth of the matter is that's who the Fed represents. The Fed doesn't represent us. Doesn't represent anybody else. It's owned and operated by the U.S. commercial banks. That's what it was put in place for. Now, the big question is the Fed in the future going to be, is the Fed literally trying to give up some of its power? Because the power that it's been given by setting the monolithic Fed funds rate, right? That was given to them by FDR, who was I hate to say this, but he was he was an international globalist and a commie, just like Woodrow Wilson adopted British foreign policy and British domestic policy and all this stuff. When you start to go through the implications of a single Fed funds rate as opposed to the 12 regional rates the Fed was designed around, this is why California has outsized control over American politics, because California was always getting capital below its real cost that its economy should have. When we were at 4%, California's rate should have probably been 5%. Mississippi's rate should have been 3%. So capital should flow to Mississippi and should not flow to California. But with a singular monolithic Fed funds rate, Mississippi has to pay a point higher than it should, and California pays a point less than it should. What happens then? Money never flows to Mississippi and always keeps flowing to California. No different than why Germany has bankrupted Europe. Same principle. The monolithic interest rate amongst the ECB is why the Germans run basically an internal mercantilist vacuum job on the entire periphery of Europe in order to concentrate power in the German industrial class and German political class. And, the Germans and the French have always hated the Italians, which is why Italy is the one they've always targeted to take over. And anytime Italy tried to get out from underneath these people, they replaced their government.
Right.
And the Italian deep state has, if you think our deep state is bad, we're pikers compared to the Italians. They created the concept of the deep state. It goes back 1,000 years in Italy. Like they're good at it. And I say that as an Italian, and I'm like, that's the one thing I wish Italians weren't good at, right? We're really good at a lot of other things. But this thing that we're really good at is, political skullduggery. We're the masters at. And, we taught the Brits, and the Brits have destroyed us with it, and blah, 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 blah. So that's roughly the lay of the land. Our economy is more dynamic and resilient than people gave it credit for, because we never watched it actually stressed by any tightening cycle within the United States. And what it did was it kept blowing credit bubbles far beyond what they should have been.
Right.
And then when they blow up, guess who gets blamed for it all? The Fed does what it's supposed to do, which is bail out the banks, and then we deal with and then they get the opprobrium, Occupy Wall Street and everything else. And I want you to understand that this is a tactic or a strategy that's always put out there. Let's take for instance, in a couple of areas that I'm near and dear to my heart, and I'll explain the parallel here. And once I explain it to you that way, you're going to go, oh, wow. Okay, so how do you get conservatives angry?
Culture war.
Culture war. So what do? Well, if you demonetize Jordan Peterson through Patreon, then you set the process in motion, right?
Right, exactly.
Who gets the opprobrium? Who gets the hatred? Patreon? Yes. Did Patreon have any leverage in this situation?
No, they're listening to the banks.
They have to listen. The bank comes to them. The bank, or worse, the political operative that runs the bank says, "Look, we're going to demonetize you. We're going to take away your payment rails. We're going to take away your ability to do business if you don't demonetize. If you don't get rid of Jordan Peterson, Dave Rubin, Sargon Akkad, and all these other people." Disney, hey man, if you don't make woke She-Hulk, we won't give you the money to make movies, to make the movies you want to make. we yell at Disney and scream at them for, for recasting Ariel in the live action Little Mermaid as a black girl, because that's all we see. Or Star Wars or Marvel or whatever it is. Like, this is how this works. The company implements the policy. I'm not saying that Disney doesn't have terrible people on their board undermining the company. Of course they do.
Right.
But BlackRock has a seat on the board. Vanguard has a seat on the board. State Street has a seat on the board. They are all shaking these companies down. Bud Light, like we can.
Oh,
the
absolutely.
NFL, go
Because they're literally committing
over and over and over again.
They're literally committing marketing suicide. Bud Light's a great example, and I love the term "go woke, go broke." However, things that should have seen the CEO and the board removed, that doesn't seem to happen. There doesn't seem to be that that governor up there that says profit before all else. Not that I'm all about maximizing profit, but
what we have is a feature, not a bug. Of this is the design. When I heard Matt Gaetz use that phrase the other day when he was on Face the Nation about the spending bills, I'm like, oh my God, his staff reads friggin' Gold, Guts, and Guns.
Oh,
I'm
absolutely.
literally the only guy who uses that phrase, right? Again, I'm not busting my hand, patting myself on the back or nothing. I'm just saying, I'm amazed. I'm like, oh my God, like, I say shit, and then I see it reflected back at me, and I'm like, okay, I'm going to say more shit. Like maybe the right people are listening. 2 years ago, I said Donald Trump should run for Speaker of the House. Like,
and I think he's going to D.C. this week. I'm going to head down to D.C. myself tomorrow.
He's at the meeting. He's going to be at that meeting. Interestingly enough, when I first floated that, I think I floated that in right after the election in 2020, I said, he had to actually, Stephen Miller actually issued a statement saying he's not going to run for Speaker of the House. I'm like, oh my God, they read Zero Hedge, and they read my article on this. I'm like, oh, that's hilarious. I think it's insane that they read my stuff. But just to understand, this is the kind of, we have so much more power than we think we have. They gaslight us into thinking we don't have any power at all.
Yeah. Are you familiar with Riley Moore, the treasurer of West Virginia?
I'm not.
Great guy. He's actually running for Congress. It's a pretty safe bet he'll make that congressional seat.
Cool.
But a couple years ago, he began to push back against BlackRock, Wells Fargo, all these guys, because he said, look, all of our wealth is in the ground, and you're telling us we're not going to be able to access that? And you're going to beggar us? No. So what he did was he said, BlackRock, all you guys, you're not going to get any more West Virginia money to invest. Oh, and Wells Fargo, let's go down the list. Wells Fargo, Bank of America, US Bank, you're not all caught up on this ESG stuff. You're going to have some more of our business. And some 14 other states have been following suit. So you're right. They're realizing they have power.
Mm-hmm.
And banking is interesting. I've been a big fan of the concept of public banking. You look at North Dakota, they've had a public bank since 1917. Why not keep that money close into your state where you can manage it, make the prudent loans, make the investments in your own state? Like Mississippi, keep the money in Mississippi, invest it, put out 3% for good projects.
One of the things I've been saying recently, like I do my primary banking through a small credit union here in North Florida where I am. And, I keep looking at they have $1,000 minimum on a 7-month CD at 4.9%. I'm like, I could get 5.4 on a 3-month money with a Treasury direct account. But,
Right.
So what? I can give up 50 basis points and get 4.9% and leave that money with my bank and let them take the 50 basis points to recapitalize themselves against the losses that they're carrying on their Treasury portfolio.
I actually chose to do just that with my bank. I moved $10,000 in fresh money into it, and they said, "Hey, what do you want to do with that? Why don't you do this?" And I said, "What if rates go up?" But it's like, hey, It's a great local bank. Bar Financial rates it as excellent. I would love to see them reinvesting in my community.
Right, exactly. And this way, I know if I were to do that, then the next time I go in there holding, a few $1,000s and 10,000 bucks or whatever it is, 5,000 bucks, and I'm holding those 7-month CDs. When I want to go in there and get a new car loan, I'm going to get a half point off on that car loan. So I'm taking an appreciating asset. I'm helping them improve their balance sheet. I'm giving them the loan over, the car companies who are going to offer me like a teaser rate or whatever. Like, this is the way you rebuild the local community, by keeping the money there. When you get an opportunity to pay cash, use it. Why? Because every time you use a credit card, 1.5% of your transaction leaves the area.
That's so true, Tom. Are you familiar with Catherine Austin Fitz?
I am.
I love her Solar Report, and she came up with this concept of Cash Fridays, where one day of the week you pay cash for everything and try to buy local.
Yep. Absolutely. We had in my hometowns, they just opened up a butcher shop. Just opened up. I'm like, I'm the happiest guy in the world. Why? I mean, it's not like my local, my local supermarket doesn't have a good meat section. It does, but I now have an option. I can go to the local butcher shop and give them one. They cut a better steak anyway.
Sure.
Right? They make better sausage anyway. It's only $1 more a pound, and it's my local business, and they're probably getting their cows from local farmers.
Right. And that money is just circulating. It's adding to the velocity of the local.
And it stays where it belongs. Right.
That's awesome.
The money stays where it belongs.
And that's, I wanted to talk to you about policy, but that seems about as solid and sound and sane a policy as I could imagine that we can practice at the grassroots level.
That's when people ask me all the time, what can I do about this? I'm like, you have investable capital? Go look around your town. What don't you have? What don't you have? What business does your town need? Well, maybe you should think about putting a pool of investors together and find an entrepreneur who wants to open one of those up. Remember like SCORE, the old,
right, exactly, the old Better Business Bureau guys, yeah.
SCORE. Right, and those, those guys were destroyed by zero bound interest rates. Oh yeah, they were wiped out. And these private equity guys would just come in and buy up whole towns and rebuild them and take all the money, and then take all the money out and leave them sitting around with these empty shells of these monuments to their own ego. And then we wind up with leftist city politicians going, "This is the way capitalism works, and it's terrible," and blah 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 blah. I'm like, and then we're left holding the bag, and we're left holding the infrastructure costs. And I'm like, well, you're partially right about all of that. That's not the way capitalism works. That's the way communism works, because that's what zero bound interest rates means. We don't have that. That's the ultimate end of private formation of capital, where there's no rational risk assessment and there's no rational pricing structure for risk, which is the whole point of interest rates in the first place.
And it plays out in the real world. I recall a friend of mine was telling about when he was a kid, his friend's father ran the local bank, one of the local banks. And there was a builder they wouldn't give loans for, his homes. And they said, right, he does a lousy product. You'll be back here in 7 years wanting to dump it. So no, we want you in a place for 30 years. So they were exercising that kind of very prudent fiscal control over their locality.
Yeah, no, absolutely. And one of the interesting things about where we are at 5.5% is that the commercial real estate market is a mess, right? All these private equity guys and these vulture capitalists are now sitting on 30-40% losses. And as guys like John Twig and Randy Woodward and Danielle have talked about at length on other podcasts, and we're all plugged into this, is that they're not making the trades and trying to get out from underneath those bad commercial real estate loans because they don't want to book the loss. But at some point they're going to have to. And guess who's going to want to buy those at the right price. Well, the insurance companies and the pension funds are going to want those, because what was a, say, 4% commercial real estate loan, but if you buy it for 50% off, it's now an 8% coupon rate. You're buying it with an effective coupon rate of 8%, because it's still paying 4% on the original loan note, but now that cash flow based on your cost of your
cost of capital.
Your cost of capital, your what's the word I'm looking for? Your cost basis is 8%. Now at 8%, who wants 8%? At 8%, your pension fund, local pension fund, or your local insurance company wants that income stream, and they want that property to be successful. They're now a partner in trying to make that property a go, as opposed to somebody always looking for their exit strategy. Their exit strategy is, I want this note to pay me 8% for the next 30 years. That's their exit strategy when the loan is paid off.
Right.
Okay.
And 8% is pretty good rate.
Becomes very interesting. What's that?
So, in the short run, what do you think is going to happen to commercial real estate? I mean, these rates are going to hammer them. A lot of workouts.
I think so, and it's going to be regional. Clearly, it's real estate. I mean, it's everything is about location and cost, local cost of capital. But the bigger discussion here is that with a domestic debt indexing rate, we don't actually need a Fed funds rate. SOFR can re-regionalize, and everybody can quote their debt as a premium or a discount to SOFR based on credit conditions locally.
Interesting. So San Francisco, not so good, but Albany, New York, maybe.
Maybe. Like my point being is that, and I brought this again when I had Danielle on the podcast originally. I brought this idea of the re-regionalization of the Fed funds rate up to her through SOFR, and she's like, the New York banks will never give that power up. I said, you're probably right about that, but that's for us to decide, not J.P. Morgan.
We're at 58 minutes. We plan to go an hour, so we've certainly filled it up with great stuff. I know everyone's going to appreciate your take on things, Tom. I always have. I had a technical difficulty. I wanted to flash your website on the screen. Unfortunately, that didn't happen. Could you, and I'll put it in the comments too, could you tell everyone how to get what's the best place to get a hold of you, subscribe to your fantastic newsletter?
Sure. You can go to the blog over tomluongo.me or goldgoatsandguns.com. You can just find me. Even if you type my name into Google, you will eventually find me. You can follow me on Twitter at TFL1728, where the very worst version of me will come up every day. I promise.
It's Twitter. Twitter's a minefield.
That is my solemn pledge to y'all. And but the heart of it is at Patreon, Patreon/goldgoatsandguns. The newsletter is $12 a month. There's two tiers. There's a $4 a month tier and there's a $12 a month tier. And where I do private blogs, I do private video reports twice a week, giving you a state of the markets and going over all this stuff. I do private blog posts as well. And I do all of that to keep me engaged, not just with the community, but to keep me up to date as to what's happening. Because if I don't, well, I don't have to work every day then, right? And honestly, the way you stay engaged with all of this is by having an active community. And I think we have one of the very, very best communities I've ever seen curated. And I've been in a lot of them over the years because these people are so engaged. We have a private discussion server with 50 friggin' channels, and people are filling it up with just the best information every day. They bring the entire internet to me. They want to see me succeed. They pay me to help me succeed because they understand how important this is. And
absolutely.
And I do my best to be the conduit of their energy and their enthusiasm and their need to make sense of this insane world. And because of that, it's been one of the single most rewarding things I've done in my life, other than become a father. And I can't stress highly enough how great my community is.
Wow.
There is no me without them. It's that simple.
Well, it's fantastic. I know I learn something every time I watch a podcast, read a newsletter, and I really encourage everyone, hey, it's just $4 a month to get onto that basic level of Tom. So, jump in and be smarter than the other people in the room. Tom, thanks so much for joining me today. And, it's there's trouble ahead, but somehow I think we're going to be okay. So, America, sleep tight.
Yeah, it's not going to be terrible. It's going to be bad, but we can get through it.
Hey,
Not too bad. We'll work with it.
We'll work
Sounds
with it.
good.
Very good, Tom. Thanks so much. Have a great day.
You too. Take care now, Kevin.